Whatever the Fed does or doesn't do next week, it won't just be the bond market that moves. Quantitative easing is already wreaking havoc in the foreign exchange market. And who would know better than the man who manages the world's biggest currency hedge fund? John Taylor oversees some $8.5 billion as founder, chairman, and CEO of FX Concepts. And I'd like to point out that John correctly called back in March that the dollar would strengthen to 120 per euro from 135. His funds are up about 14% this year. John is with us right here at Bloomberg. John, let's talk about quantitative easing. QE2, we've been talking about it all morning. Look at the dollar right now. Is QE2 priced in, or do we still anticipate, or do you, I should say, still anticipate big moves next week?
No, I actually would argue that it's almost entirely priced in at the moment, but I still believe the dollar will be weak probably through the end of the month of November as we sort of get a feel for the program.
Now, when we talk about priced in, you're looking at what? The DXY, sort of, or a trade-weighted balance, or what is it that you're looking at? What's the right level for the dollar relative to your expectations for QE2?
Well, I would look at the DXY or at the euro in general, and in the euro's case, some level between 140 and 143, I would expect, will be pretty much the high for the euro.
And then the euro, we're going to get into a conversation about the euro, but specifically as it concerns QE2, you think that's about the right level for the euro versus dollar? That's about as strong as the euro can get?
Right, that's what I would expect.
Let's talk about some of the global tensions surrounding quantitative easing and devaluations. You know, the Brazilian finance minister refers to it as a currency war. I want to highlight a quote from a note that you wrote on October 21st, and here it comes. Countries are complaining loudly because Bernanke's excess dollars are being sold and their own currencies are being purchased, rising as the dollar declines. The real war will begin as countries place restrictions on capital flows. That leads me to this question. You don't think we're actually in a currency war yet? It has yet to come, and it's going to be all about protectionism. Is that right?
Yes, that's true. I mean, this is basically the start. I mean, you have one step and a counter step and then another counter step, and then things begin to get out of control.
How bad is it going to get?
Well, hopefully it won't get too bad. I mean, we're having meetings all over the world, the G20 meetings, the meeting of the Asian finance ministers this week in Hanoi. All these kinds of things are attempts to lessen the strains, and perhaps...
But hopefully doesn't sound all that persuasive or convincing from somebody with as much money at stake in the currency market as you. Do you believe the G20 can really accomplish anything? Or with so many dollars on their balance sheets, it's the emerging market central banks that are really driving the bus here?
Yeah, well, the emerging market central banks are driving the bus. The G20 probably is only on the bully pulpit, doesn't have enough strength to really do anything. But maybe everybody will realize it's in their best interest. I'm not too optimistic.
You're not too optimistic.
No.
You're not too optimistic because of the shift in economic power eastward?
Right. Well, there's so many people involved, and all these individual countries have different points of view and different reasons to move.
John, I want to highlight another quote from that same October 21st note, one that you might say treads on a bit of sensitive ground. Some people consider it perhaps a bit controversial, and here it comes. Didn't Bernanke and the Fed announce in late August at Jackson Hole and multiple times since then that the U.S. was going to enter QE2 and debase its currency, setting off a currency war? Bernanke, like Hitler 7 decades ago, had been warning everyone who would listen for years. I have to ask you, why compare Ben Bernanke to Adolf Hitler?
To get people to pay attention, because most of the time these letters are kind of boring and dull and people don't pay attention. This makes people pay attention. What's really happening here is that Bernanke has been telling people his strategy since 2002, and nobody has really believed his strategy. And now all of a sudden he's doing it. What the reaction will be in the rest of the world capitals, we don't know. But the fact of the matter is that this is a long-term setup that we're in.
Now, had you been listening to Ben Bernanke as far back as 2002 and positioned yourself and had the stomach to ride out the volatility since then, you'd be winning, right?
Yes, absolutely.
Now, what does that say about the other signals the Fed is trying to send?
It says that you should believe those signals. The Fed has a tremendous amount of power. And Bernanke is where that power is centralized. And if Bernanke is telling us that this is going to happen, you should pay attention.
John, when we come back after a break, I want to talk to you about the yen, the pound, and a little more on the euro. But right now I want to talk to you about the dollar, because when we started this conversation, you said that the dollar was going to weaken at least through the end of the month.
Right.
I think we're talking about November here.
Yes, right.
Back in August, last time you were here, you thought that the dollar was going to weaken for a couple of weeks, maybe towards late August, and then strengthen through the end of the year. Is it just the timing of your call that was wrong? In other words, you expect the dollar to start picking up speed maybe before the end of the year?
Yeah, well, I must say that the Jackson Hole initiative was surprising to me, because I thought it was very early. I mean, I thought the U.S. economy would hold up a little longer than that, and we wouldn't, or that Bernanke wouldn't be so nervous about it. As soon as the Jackson Hole issue, the QE2 issue came out, you had to sell the dollar.
You had to sell the dollar?
Yes.
And at what point do you stop selling the dollar?
Well, I think the best measure of when to stop selling the dollar is when, in fact, the QE2 effort is matched by problems in Europe or problems in China.
Okay. Welcome back to the Inside Track. I'm Erik Schatzker, continuing my conversation with John Taylor. He's the co-founder, chairman, and CEO of FX Concepts, the world's largest currency hedge fund. John, we were talking about quantitative easing, QE2. We're going to get it next week. The Bank of Japan has already embarked on an even more ambitious program, buying much lower quality assets than treasuries. It has had no impact effectively on the Japanese yen. The Japanese yen continues to strengthen. The intervention last month hurt your funds badly. Did you hold on to those positions? And if so, have you made a lot of money, perhaps at Japan's expense, over the last few weeks?
Yes, we've gotten our money back. The market is full of bumps and knocks in the night, and generally they all balance out, and we've gotten our money back and done very well with the yen. I think the Japanese have themselves a very difficult problem.
And, okay, let's try to put that problem into numerical terms. The yen the other day came close to 80 against the dollar. Just how strong do you think it can get?
Well, there's no reason that it can't go past 80 to something like 75 in the next month and a half or so while the dollar's weak.
And, okay, let's try to explore the implications of that, because we have what you might call the Geithner Agreement out of that G20 meeting in South Korea.
Right.
Countries pledged that they will not engage in competitive devaluation.
Right.
At what point does the BOJ cry mercy? At what point do they throw the agreement out the window and say we simply have to do something to weaken the yen?
Well, there is a point, and the question is exactly where is that point. I mean, you're hearing the major exporters from Japan make comments about what kind of levels they can tolerate. And we're also seeing them act in the market and prepare themselves for a weaker yen. I mean, a stronger yen, a weaker dollar.
Now, another region with some economic problems of its own is Europe. You have been on record multiple times as saying the euro simply has to weaken.
Right.
The market's gone against you. When do you think this kicks in?
Well, it's interesting. The European situation is kind of a straw that breaks the camel's back. The dollar situation is kind of fluid. As the QE2 continues, the dollar weakens. But in Europe's case, they can give a brave front and stand up there very well until all of a sudden Greece or Portugal or Ireland, one of these countries, breaks. Give
me very briefly a level you think will end the year at for the euro dollar.
Well, ending the year, I'm not too certain. I would say something like 130, 135 in that area.
A little weaker than where we are now.
Yeah, not too much weaker. I would expect to see the euro, though, much weaker during the course of next year. And I'm still sticking by par, 1.
1 to 1.
Yes,
all right,
1 to
John
1.
Taylor with an aggressive call on the euro. Thank you very much for being here.